Hey, good afternoon, everyone. Good to see you all. Hope you're doing great. Brent, great to see you. Hi, Brad. Great to see you today. This is Brian Wilson from Market Structure Edge. We're going to go ahead and get started here in just a second. I'm going to go ahead and get the recording set up. Looks like it might have gotten set up already automatically. Fantastic. So if you don't want to be on the recording, please take yourself off. But once again, April 30th here. Great to see everyone. Just a couple of rules to think about for today's presentation. All questions are welcome. We do consider it to be a live discussion. We do ask that you just mute yourself during the presentation itself. Please just toss questions in the chat line, and yeah, we'll go ahead and get started. So once again, Brian Wilson from Market Structure Edge. We'll go ahead and make sure my screens are minimized here and share my screen. I'm going to start with a concept here that circles back to what we call broad market sentiment. So for those who are not familiar with it, broad market sentiment is here in green. You can think of that as our algorithm for demand in the market. And what you're looking at here is sentiment for the S&P 500. And let me take this a little bit farther back so you can get a good idea of what we tend to see over time. We'll take a 1 year look at this. So what we see over time, sentiment will wax and wane. It doesn't tend to get above what's called the red line too often. It does periodically, but even less noticeable is movement when it moves below the green line. In fact, it's only occurred twice here during the course of the last year. So from a context perspective right now, what do we notice? Well, we notice that we went above the red line about 2 weeks ago. What do those red line conditions mean? I'm going to share with you part of a spreadsheet. Those that are familiar with this know where I'm going, but there's a method to my madness here. So over time, and let me show you what I'm referencing here. When the market moves above the red line, market returns from movement above to movement below tend to be about 60 basis points. So that's measurement going back over the last 4 or 5 years. So that gives you an idea that the whole market just kind of calms down. The whole market gets stretched and we just calm down for a period. And you can see that playing out in recent trading. Go back to December. What did the market do? The whole market just calmed down. Go back to January, whole market calmed down. Same thing in that would have been February trading. Now, this particular trade, this has been a little bit of an exception. So when we do things like this, we take note of exceptions. Look at that movement above the red line, almost 5%. Norms are 50 basis points. Like, okay, well, we take note of that. Something else that has happened with recent trading, and sorry, just admitting a couple people here. So something else that has happened with recent trading is that big tech has been very stretched. What do I mean by that? Let me show you our big tech portfolio for those who are not familiar with it. Big tech comprises the companies that you think about, the Amazons, the Microsofts, the Teslas. We also include a couple of others in there, Netflix, Shopify. But big tech itself, when it moves above 8, and this is just something that I've been measuring the last couple of years, big tech becomes very, very stretched when when sentiment moves above 8. Check out what happens over time here with big tech. Last couple of years, you can see that normally when big tech moves above 8 sentiment, well, the whole market just slows down for a period of time. What has it done this time? Well, we continued to charge forward. The last time that we saw that was actually last May. What were we doing last May? Well, we were coming out of the tariff tantrum, and then the market continued to explode higher. So this, I'm painting a little bit of a context right here at the beginning of our discussion. The context is a very hot market for big tech, and a very hot market for just the market in general. You can see how we've been above that red line, and instead of gains flattening out like they normally do, we've had a little bit of an outlier for this particular time. So that's where we're at this particular time, and it's always helpful to paint in terms of context. Where are we from a sentiment perspective? Where are we from a short volume perspective? So sentiment has been hot, short volume rising. That communicates that right now there's extra supply in the marketplace. All things being equal, extra supply tends to kind of squash rallies. It's like sailing into a stiff breeze. Well, let me stop the sharing for a second and see if we have any questions that have come in. Not yet, but feel free if you have questions as we're proceeding. Happy to address them. What I'm going to go next is to give a couple of examples. If you were looking at the setup ahead of big tech starting to report, what did the respective setups look like? Well, let's just take them one at a time. It doesn't take too long to look at these. And ironically, almost all of them were identical. We look at Microsoft coming into earnings. What were we tracking? Well, we were tracking demand. Once again, the green line is our algorithm for demand. Sentiment had started to fall. Short volume was also falling. Microsoft down today. We look at Meta down today as well. What was their setup coming into earnings? Essentially exactly like Microsoft. Sentiment moving lower, short volume also moving lower. The way that you can generally think about lower short volume is it tends to stunt some of the demand moving lower. So that's one way to think about that. Google, actually the same exact setup. You can tell that money has been moving in a very similar manner across the market. Sentiment lower, short volume also lower. Google happens to be up today. So far we've had 2 out of the 3 where weaker sentiment kind of had an impact on overall share price. Google, it did not. Amazon, if we were looking at them, they probably had the strongest setup going into earnings. And they had demand once it comes up. And it's taken its dear sweet time, but demand was 10 out of 10 coming into earnings, and short volume was moving lower. So if you were going to choose, any of those companies, to invest in ahead of earnings itself, it would probably be Amazon because of that particular setup. What about Apple coming into earnings here after, I believe it's after the bell? Pretty much exactly what the Microsoft and Google and all the rest of them have been. We see sentiment starting to fade. So money has been moving in a very similar fashion across the market here over the course of the last few days, and it's impacted 2 out of the 3 to the downside today. 2 out of the 3 Magnificent Seven, one to the upside, and Amazon has been rather flat. I did want to. Most of you are familiar with this, but I'll show you what this looks like. What I'm going to show you is what we call our model portfolio. And what we do, it's a quantitative model, and I'll show you what the criteria for this one looks like. This one is looking for certain market cap range, supply demand divergence, and that's between exactly what it says, between sentiment and short volume. And then this particular model actually looks for passive investment. Why is that? What tends to be the engine of the market. Fascinating discussion, though, over the course of the last few days is this model was moving ahead of big tech. And I'll take this back to the beginning of the week. So this was the beginning of the week. Look at this setup. This was going into Monday morning, completely in either Magnificent Seven or big tech itself. As we fast forward a couple of days, we can see that that started to change a little bit. We get money moving into the financials and the industrials. We fast forward to today, and that continued to be the case where money, well, actually, today money went back into tech a little bit, but this is the current setup, GEV, Walmart, and then a lot of tech funds. But the point here is that sometimes the model portfolio can give us a little bit of clues in terms of what the market is doing. Heavily slanted towards big tech for a period of time, right ahead of big tech earnings, kind of came out briefly and then started to come back in right ahead of earnings itself. And by the way, if you're, let me show you what this looks like year to date. This is available for regular subscribers. And what we do over time is we have 3 or 4 different funds, and we're always analyzing these funds to try to pick the best possible ones. Last year, we were using different funds. The point is that every year, and really every month, is different in the marketplace, and we have to adjust to what the market is giving us. So far this year, this has been the best performer, and as you can see, it's lights out versus the S&P 500, returning 24% so far for the year versus S&P 500 returns of about 4%. And of course, as we can't promise that, but that's what it's been doing so far this year. A question from Anesh. Can we look at GE and BE? See, GE would have already happened. BE BE would have already happened as well. So let's go take a look at those two. Share my screen again. And recognize with earnings, personally, I don't tend to trade ahead of earnings. It can be a little bit like being in Vegas and rolling the dice. But if you look at the setup for GE itself, I mean, that was a very poor setup, right? Sentiment was fully washed out at 1 out of 10. Short volume was above trend. Um, that's something if you are betting, that's something that you would bet that GE would continue lower. Anesh, I know what happened to GEV. I don't know what happened to GE itself. Let's go take a look at that. So was that the reaction day or was that the reaction day? I'm not exactly sure, but it looks like it probably moved a little bit lower coming out of earnings, if I'm reading that correctly during the last 5 days. But the point here is that was a poor setup, and you're reacting, or if you are betting around earnings, recognize how market participants are set up. Could they be in front of their skis one way or another? Could you bet the other direction? Yes. Just recognize most of the money right now would have been betting on lower prices. Bloom Energy, very different setup, right? We look at what they were doing going into earnings, sentiment 10 out of 10, short volume low. That was a bullish look going into earnings, and you can see the result. Shares moving higher. So that one would have worked relative to the setup they had. Um, let's see. Shri was asking me, can we slow down a little bit and explain the curve metrics matrix? Could you please explain what you mean by the curve matrix? I'm sorry, I'm not sure if I understand that question. And yes, I'm probably going too fast, so apologies for that. And circling back for Anesh, well, it was GM instead of GE, so I'll go back to that one. Brad, a question: if sentiment is slowing on the Mag 7 all at the same time, the SPX is hitting all-time highs. So I'd have to assume that among the other 493, the sentiment must be healthier. I'll circle back to that question, Brad, in just a moment. Recognize that even though sentiment is slowing for the Mag 7, it's still above 6, so it's doing pretty well. Anesh, let's go circle back to your question on GM, and Shri, I'll see if I can understand what you're saying. There's sentiment line and short interest line. Yes, I'll try to slow down in terms of that explanation, and I'll do that with GM here. So GM reported a couple of days ago, looking at their overall setup. I think they had 1 day of gains afterwards, trying to recall. This is almost like the Magnificent Seven. So we see sentiment, and this is the sentiment line here in green. That's our algorithm for demand. So sentiment here in green was falling, and short volume was falling at the same time. So lower short volume, all things being equal, will tend to stunt declines. That was the way that it worked out for GM, moving a little bit higher post earnings, if I'm reading that correctly. Keep in mind, if you're looking for the best possible setup, whether it be earnings or whether it be buying any particular company, you're looking for something like BE. You're looking for demand that's really strong. Once again, demand right here is 10 out of 10. Short volume is very low. That's the best possible type of thing that you want to buy, that healthy demand and low short volume. Stop my screen share for just a second. Google and Meta. Yeah, we can go through Google and Meta one more time. Thanks for the questions. Google and Meta, they both basically had the same setup going into earnings itself. So demand was fading, so sentiment was falling, short volume down below moving lower at the same time, and Meta had the same setup. And as I've shown you with the other Magnificent Seven names, basically all of them have had that same setup going into this earnings print. Meta, demand moving lower, short volume also moving lower. Oops, I was doing that. Sorry, guys, I do that once in a while. I was doing that without my screen share on, so sorry about that. Let me circle back there for a second. So this was the Meta setup. Demand moving lower coming into earnings, short volume also moving lower, and then the Google setup was exactly the same, and that was demand moving lower into earnings and short volume also moving lower. Brad, let me see if I can capture your question from earlier. And let's kind of walk through some of the setups for broad market itself. So Brad's question: if sentiment is slowing on the Mag 7, SPX is hitting all-time highs, I would have to assume that among the other 493, sentiment must be healthier. So let's take a look at the broad market. Once again, recognize that for broad market right now, sentiment is 6.2. That's a very healthy number. Generally speaking, anything above 5 tends to promote broad market advances. Magnificent Seven making up about 35% of the broad market. sentiment right now at 6.7. I mean, it's still very, very strong. What's the general trend that we're tracking right now? And recognize that we're at a potential inflection point. What's the inflection point? It's month end. What happened back at the end of March? Well, the whole market went into rally mode at that particular time. What are we tracking right now? Well, we're tracking all equity portfolio. That's exactly what it means. 2,800 companies, sentiment falling, short volume kind of rising. Dow Jones, sentiment falling, short volume kind of rolling over just a little bit. But you'll see kind of the same general trend playing out across most of these portfolios. Large cap sentiment falling down to 5.6, short volume okay there. Mid cap, same type of thing, sentiment falling. You see that trend playing out. Mega cap sentiment falling. So we are in a period where sentiment is coming off of its highs. Very normal activity across the market, but it still remains very, very strong at 6.2. I'll show you something, and Brad, I know you had another question. I'll show you something from daily trading ideas that I will sometimes use to give me an idea what's occurring in the market. So daily trading ideas, you can just click on that. You can go to momentum or go volatility. Momentum right now, what sectors are dominating, and this can give you a good idea, like where's the money been really hot in the market at this particular time. Well, look at all the market that's heavily slanted towards information technology. I wrote about this a couple of days ago in the market desk note. It's both an opportunity and a risk. The opportunity is that trend could continue to move forward. The risk, part of it was the fact that we were coming up on big tech earnings, and maybe we were too hot, coming into this period. I mentioned can we get an extension of that type of rally? Take a peek at XLK, and I'll compare this to financials just to give us an idea. Take a look at the run that this had last year. So from the April last year, when we had the tariff tantrum, going all the way through October, that was a run of 67%. So even though tech has been on fire here during the course of the last month, at times that can continue. So just recognize that. We are at this potential inflection point at month end, and part of what we'll be evaluating is can big tech continue on the tear that it has been, during the last month. All right, Brad, I know you had another question. Let me see if I can get to that. Brad saying, I listened to another podcast this week, and the guest said that the market is engineered or biased to go up over time because over time, year over year, there's money flowing into the market. The Fed is increasing money supply, which flows through the economy, and ultimately part of it goes to investments. Does your data show the money aggregate flowing into the market? Well, I mean, yes, it does. If you look at broad market sentiment over time, I think that number is about 5.3, 5.4. So in other words, anything with sentiment over 5 tends to support market advances. I did an exercise right before we got on the call. I looked at big tech, last year when we had that run in technology, big tech sentiment averaged about 6.2. So in other words, a lot of money flowing in. And one other thing to think about in terms of the broad market itself, recognize that the Russell 5000 used to be 5,000 stocks. Now it's about 2,800. But is money flowing into all 2,800 of those? No, a lot of those are small cap. The money's going to be tilted towards the large cap, the liquid ones. And then it's basically an inflationary effect across the market, especially as ETFs continue to proliferate. that just increases that overall dynamic. MU, SanDisk, AVGO, take a peek at those. Let's go ahead and take a look at those, MU, SanDisk, and AVGO. Thanks for the questions, guys. I appreciate them. All right, so what is the setup for Micron right now? It's very strong. Sentiment, once again, algorithm up here at the top, 10 out of 10. It's been that way for the last couple of weeks. Short volume is low. That's a state of divergence. And divergence tends to support broad market advances or individual equities as well. SanDisk, exactly the same. Very, very strong demand, very, very low short volume. That's a very positive setup. And AVGO, this was one of the names recently in the passive investment portfolio. Demand is strong, 10 out of 10. Just starting to weaken just a little bit, but that's still a very strong number. And short volume is very low. So all three of those, are excellent. Candace, is divergence still the main green flag for the model passives portfolio? The criteria in Candace, I'll share my screen and show you the criteria. The criteria is looking, all three of these have to be present. So you're looking for market cap, certain range. Basically, think of it as your large caps. You're looking for a certain supply demand divergence, and you're looking for passive investment being the key behavior. So for that particular portfolio, we're looking for all three. And just as a reminder, if you're interested at all, what I'll do every day is I will just have these names on a watch list and literally just watch them. And what I'll do is, towards the end of the day, I'll take a peek at them. Do I want to pick up some Apple? Do I want to pick up some Amazon? Do I want to pick up some GE? Google. I'm not going to chase that at the end of the day. I probably wouldn't chase, Walmart either. But it's like anything else. It gives you some choices, and the choices here are names that have good divergence and names recently where passive investment has had good leadership. And those are, generally speaking, pretty good choices. All right. Do we have any other questions coming in? I think we have a couple coming in. Let me go ahead and take a peek at our look ahead. And then we'll pick up a couple of these other questions. Part of my look ahead, and I'll move back to my spreadsheet for a moment, is that when big tech has been hot, it tends to stay hot. So the last couple of years, once again, what we're looking at here is big tech over 8. When that occurs, what happens afterwards? Well, during the next week, we tend to do pretty well. If we look at sentiment, what tends to happen with sentiment afterwards? You look at some of these times where we've performed really, really well. What tends to happen afterwards? Well, the market tends to do pretty well. Recognize though that we are at an inflection point. We saw dramatic changes last time, especially with big tech when we got to the end of March and moved into April trading. When we moved into April trading, now we'll be moving into May trading. As a general rule, doesn't work all the time, but think of new month, new money. So 401k allocations coming into the market, that type of activity, that will be something to to look at here over the course of the next week or so to see whether that will give any lift to the market. One other question in terms of the daily top recommendations. Absolutely. And every day we have those, and the way that that works for those that are not familiar with it, daily trading ideas, it's trying to give you a range, and it's looking at the probability over the course of the last trailing 90 days. The dynamics are explained up top here, and for a couple of these names, it's been 100% of the time. What you want to recognize with these names is some of these names are very volatile. These are not as volatile as some names that we'll get sometimes. But sometimes you'll have names that have 12% volatility or what have you. Just be aware that's the potential where it could both move higher and move lower. What you want to do is buy it between the entry low and entry high. And if you were buying CRDO during the last 90 days, it's worked 100% of the time, and that's giving you 2% gains there over the course of the next 1 to 5 days. And what you can do for those as well, and I do this, and you can see it right here. I'll just have that up on my screen, and then I tend to look at things towards the end of the day, trying to pick things up in the last 10 minutes or so of trading. You don't have to, but that I have other things going on, so that's just a way that I approach it. These are some of my current holdings that I did recently from the passive investment portfolio. These are names that I'm holding right now. And actually, I bought ERX a couple of days ago. Why did I buy that? Well, if you look at what the sectors are doing right now, energy sector is actually one of the few sectors that's actually moving higher, and it's been that way. Circle down to energy just to give you an example of that. Ideally, what are you looking to buy? Well, you're looking to buy demand that's moving higher, and then you're looking to buy short volume that's moving lower. With the energy sector starting to move through neutral after being stuck for a long time, I decided to buy that, and to give myself a little bit more of a boost, I bought a leveraged play. So that's why I bought ERX. If a stock on the daily trading list is already up half the volatility, do you just pass on it or pursue it? So SanDisk today. All right, let's go take a look at that. So SanDisk trading right now, it's up 4%. It's up to a little over $1,100. And so yes, in that case, you would pass on that one. It's already past the entry high, so you would not want to chase that. That's where you want to. That's your sweet spot, entry low to entry high. And that gives you the range where you want to ideally pursue that trade. And you could move into it at lower prices as well, but this is just telling you don't chase it above that particular price. All right, guys. Once again, in terms of the path ahead, we have a red hot market. We're at a potential inflection point, and we labeled it an inflection point for a reason. It's because market strategies can change. We definitely saw that at the end of March going into April, and we'll just have to see what that looks like now going April into May. As a general rule, and I showed this to you, when big tech is this hot and sentiment gets this hot, we usually continue moving forward in the market, but we'll just have to see how that plays out. So with that today, I'm going